Welcome back, everyone, to another Monday Market Update. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona. And every Monday, I'm here talking about what's going on not only in the Phoenix real estate market, but also the overall economy, because we all know that affects real estate. So we're going to jump in today. We're going to start, as usual, talking about the big picture, and then we're going to drill down to more local information, which is where I want to share with you what was cut in half that has to do with some local numbers that I'm excited to share with you. So let's get into it. We're going to start by talking about the jobs report that came out on Friday. Long story short, non-farm payrolls rose 223,000 in December. A strong jobs market tops expectations. So the estimate was 200,000. We added more payrolls than expected. In addition, the unemployment rate actually fell to 3.5%. It was at 3.7 before that. And wage growth was below expectations. The average hourly earnings up 4.6% from a year ago, below the 5% estimate. So basically, the jobs market is remaining strong by these numbers. However, we do know there's been a lot of layoffs announced. Amazon, Goldman Sachs, just to name a couple off the top of my head, there are a lot of layoffs going on. And so these numbers will probably eventually reflect some of that. But for right now, it looks rather strong. Payroll growth decelerated in December, but was still better than expected. A sign that the labor market remains strong, even as the Fed tries to slow economic growth. So why do I talk about all of this? Because all of this is a measure that the Fed is using to determine where they are going to move the federal funds rate, which then affects mortgage interest rates. So it's important to watch all of this because it will affect real estate eventually as things trickle down. They also talk about how the job growth marked a small decrease from 256,000 in November, which was actually revised down 7,000 from the initial estimate. I don't think that's typical that they do that, but wanted to note that. So jobs report relatively strong. We'll see how this changes as things continue to progress this year. Now, next big piece of news is the CPI. We're going to be getting the consumer price index information on Thursday of this week. Again, why is this important? This is tracking inflation, and inflation is what the Fed is trying to fight. They were trying to bring down inflation, and they're doing that by increasing the federal funds rate. So they have their eye on the CPI, not to make a fun little rhyme there, unintentionally. Very cheesy. And so the expectation is that it will project to be to have risen 0.3% in December. They're saying while slightly more than November, the monthly advance would be in line with the average for the quarter, well below the 0.5% average seen from January through September. These figures will be the last pieces of inflation information that we receive before the Fed has their first meeting in 2023, which is about February 1st. So when they meet on February 1st, the expectation is that they are going to raise the federal funds rate by about 25 basis points. Unless something crazy happens with this CPI information, it seems like that's pretty well expected and priced into the markets, but we will see what happens. They are expecting to show core inflation increased 5.7% from a year earlier. And that would be the highest December to December print since 1981. They talk about that over in here, I believe. And so it's well above the Fed's goal, but it helps explain their intention of keeping rates higher for longer. So that's all I've got for the national look at things and what's going on in the economy. So keep your eye out on what happens with the CPI on Thursday. We're going to jump into talking more about specific Phoenix information, and we're going to talk about what number was cut in half. Before we go there, if this is helpful to you, just hit that like button. I would appreciate it. And subscribe if you're not subscribed so you can be here with us every Monday. All right. So Phoenix numbers, I'm just going to take this off because I am just going to put some numbers up here on the screen. So we've got the numbers now for December, which is comparing December of 2022 to December of 2021. And as you can imagine, these numbers are pretty different year over year. We had a very, very slow end to the year, especially when we were coming off of 2021 being one of the hottest years in real estate we've had here in Phoenix. So overall closed transactions for December of 2021 was down 46%. I'm sorry, December of 2022. The total was about 5,758. So we had a really slow December, not surprising considering what had been going on. The median sales price was actually up. It was at 450,000, up 4% from December of 2021. So interesting stat to see, but if you watch my video on median sales prices in Phoenix that I just posted, I'll link that down below. And at the end of this video, I'll have a card for that. That will give you a better idea on why the price is up while all you're hearing is that prices are coming down. For our closed transactions in December for resale, it was down 54%. So that's the number that was cut in half. For resale homes, we literally had more than half cut out of our sales in December compared to 2021. Not surprising, we only had 4,073 closed transactions for resale homes, which is quite low. The median home price for December, and this is only for resale homes, that actually came in down 3.3% from December of 2021. And our median sales price for new builds actually came in up 17%. So a pretty big difference is going on between the new builds and the resale homes. And why is this? Because all of these contracts were written a year ago for new builds. It takes time for a new build to be built. And more than likely, those prices were higher at that time. And although builders have adjusted and given incentives, those closing prices are still remaining pretty strong. So new build is going to show some stronger numbers in terms of prices and in terms of activity as well, because they had those people locked in over this time period with pretty heavy earnest deposits. And so even if people changed plans or decided the economy or the market was not what they wanted anymore, a lot of people are still locked into buying that new construction home because they're at risk of losing their $10,000 earnest deposit or whatever it is. So that's a big difference there. Now our new build transactions was only down 6% from December of 2021. Pretty big difference. Resale was down 54%, but new build closings only down 6%. So definitely two types of sales that are behaving very differently. So with all of this happening, our new construction, when we look at what we have in the market altogether between resales and new builds, new homes are representing about 29% of our market right now. That is the highest market share that new construction has had since 2008. So I thought these numbers were really interesting. It's always great to look year over year, but especially in a situation where we've had such a big change over the last 8 months. So we're going to definitely see a big difference between December of 21 to December of 22. But I love that we broke out some of these new construction versus resale numbers because they're obviously behaving really different. And we have a lot of new construction being closed, representing a big chunk of the market. So builders started to catch up. And that was something that we've talked about for a long time. The builders were way behind. And obviously with this lag in resale, now they've kind of caught up a little bit in terms of their sales as compared to resale sales. So that's where we're at with year over year prices. Now let's get into talking about the Cromford Market Index. If you're new here, the Cromford report is something that I follow. They analyze data from the MLS and provide it to their realtor subscribers. And they have a lot of great information that helps us understand where the market is headed. The Cromford Market Index is really comparing supply and demand. And so based on the difference between supply and demand, it is an indication of where prices are heading in the future, especially if we're seeing more of a long-term trend. Now, the way to look at this graph is that if you are seeing anything between that range of 90 to 110, it means it's a balanced market. 110 and above is a seller's market, and under 90 is a buyer's market. So let me add my screen here, and we're going to look at where we are at today. We're at 103.2. So if you've been following the last few weeks, we were at, I think, 89, maybe 88 as a low, which was a buyer's market. This is for all of Phoenix Metro, so keep that in mind. This is looking at the market altogether, all of the suburbs. But we are sitting in a balanced market right now, pretty stable in this balanced market. And what's happened is that demand is at 72.8. So that means it's about 28% below normal. If 100 is normal, supply is 70.5. So that's sitting right about 30% below normal, with 100 being normal. And so these two numbers are so close together, our supply and our demand, that we are in a balanced market. And what has happened is our supply has remained low and some of our demand has started to recover. Therefore, we're seeing a little bit more balance. Now, keep in mind that this is been trending this way for probably the last month, but things could definitely change as we're starting to get into the time frame where more people list their homes. So as we get more supply, if that demand does not track with it, we'll lose ground on this balanced market and move back towards more of a buyer's market. So we'll see what happens. But I have some really, before I show you every city, I want to show you this graph here, just so you can see big picture on what's been going on with the CMI over time, right? So this is when things started to change last summer, and you can see these dots are so far apart. That's because the change week over week was so big. And then we got into a point where things stabilized, and then we went down a little bit more, but still just so minimal. You can see that the dots are really close together through this time. And then we started to curve back up. This is in mid-November. This is around the time when interest rates started to go down a little bit, bringing some of our demand back. And we've been slowly ticking back up since then. So this gives you a good picture of the trend of what's been going on versus just seeing that number of 89 or 100 or whatever every single week. This is clearly a trend, and we'll see how long it continues, if we start to flatten out here or if we start to go back down. But let's look at every city on the Cromford Market Index. This is the 17 major cities. So not everything is included in here, but these are the ones they're able to get the most data for to provide a market index. And last week was the first week that almost everything was green. We are in the same spot this week where we have almost every city green except for Goodyear. Goodyear is not willing to come along with us right now. But we've had a pretty big change in the CMI month over month. So month over month, the change was 21% in the, I guess, positive direction, if you want to call it that. It gained 21% on average versus last week. Month over month, we saw a gain of 16.3%. So every week, this number has increased. I think we were around 12% the week before that. So clearly showing that, as we go along, when we look backwards at that graph that I just showed you, those dots will be further apart because we're having more gains week over week. So continuing to trend in that direction. We have Paradise Valley improving for sellers at the biggest number at 57% month over month change. They were at 102.8 last month for their CMI, and now they're at 161. We also have a few other cities that are in the 30% range. We've got Avondale right here. We have Chandler right there, 38%. And we also have Mesa at 33%. So they have seen some big gains. And these green arrows are green, meaning good for sellers. If you're a seller, your value could potentially go up with the trends that we're seeing, where we're headed towards a seller's market per se. Again, keep in mind, anything over 110 is a seller's market. So we only have a few cities. We have about 5 cities in a seller's market. We've got Scottsdale, Chandler, Cave Creek, Paradise Valley, and Fountain Hills. So when I say seller's market, I'm not saying a frenzy, and I'm not saying that these markets are that the whole valley is in a seller's market, but there are 5 cities that are stronger if you're a seller, and you have less leverage if you're a buyer. And then we have about 6 cities that are in a buyer's market. So on the other end of the spectrum here, anything below 90. So Peoria, Surprise, Goodyear, Queen Creek, Maricopa, and Buckeye. So even though we have green arrows here, it just means that over the last week, they're trending in the direction towards a seller's market, but they are still a buyer's market. Hopefully that makes sense. And then we have about 6 cities that are balanced, and those are the ones that are between that range of 90 to 110. So that's Gilbert all the way up here through Phoenix. So we've got kind of an even span throughout all 3 types of markets, but the bottom line here is that every city is improving for sellers except for Goodyear. But Goodyear has been closer to improving for sellers than it has been improving for buyers over the last few weeks. So that might switch, but we'll see if this trend continues. I'm very interested to see what this graph looks like, or this chart looks like next week, as we start to see more of the supply coming to market. But right now, that's where we're at. And I do want to quote the Cromford report based off of this chart that they shared. Their last kind of note with this is that confidence could be making a comeback sooner than expected. So that's what the Cromford report is saying. We'll see what happens. And that's all I've got for you guys today. But if I can answer any questions for you, feel free to reach out anytime. Check the description below. I've got a link where you can reach out to me and set up a time to chat, or check your home value, search my MLS, and some other stuff. So make sure to check that out. And appreciate you guys coming here. Hit the subscribe button and the like if this was helpful. And I'll see you guys next week on another Monday Market Update. I'm Caitlin McKeag with the Desert Dreamers team.